Trading in the direction of a strong trend reduces risk and increases profit potential. The average directional index, ADX, is used to determine when the price is trending strongly. In many cases, it is the ultimate trend indicator. After all, the trend may be your friend, but it sure helps to know who your friends are. In this article, we'll examine the value of ADX as a trend strength indicator. Introduction to ADX is used to quantify trend strength. ADX calculations are based on a moving average of price range expansion over a given period of time. The default setting is 14 bars, although other time periods can be used. 1 ADX can be used on any trading vehicle such as stocks, mutual funds, exchange-traded funds and futures. ADX is plotted as a single line with values ranging from a low of 0 to a high of 100. ADX is non-directional. It registers trend strength whether price is trending up or down. 2 The indicator is usually plotted in the same window as the two-directional movement indicator, DMI, lines, from which ADX is derived, shown below. For the remainder of this article, ADX will be shown separately on the charts for educational purposes. ADX, how to interpret the trend strength indicator. Trading in the direction of a trend reduces risk. Identifying a strong trend in the market is the prerequisite of a successful trade. It is a skill that every trader should have. But, how to determine if the trend is strong or weak? A strong trend is worth following as it increases the chances of profit, but when the trend is weak, it would also lead to potential loss. ADX or average directional index is the ultimate trend indicator that will help you decide if a trend is worth following or not. Average directional index, minus directional index, DI, and plus directional index, plus DI, form a cluster of indicators that help you deduce both direction and strength of a trend. Why do you need a trend strength indicator? While planning a trade, you need to identify if the underlying is in trend or not. But stocks prices spend more time in consolidation than trending, resulting in multiple drawdowns. With the help of ADX, you can quantify the strength of a trend. He developed ADX indicator with commodities and daily prices in mind, but it can also be applied to stocks. ADX quantifies the velocity of price regardless of its north/south/eastward movement. Hence, 2 other lines, i.e. positive directional indicator, plus DI, and negative directional indicator, DI, are used on the charting system which act as complements to ADX. Nowadays it has become one of the favorite indicators for technical analysts who study the historical price against time to analyze the supply and demand forces in the market. Trend is your friend is a common belief of traders. Once the trend is identified, the next important thing is timing and quant. The challenge is to determine the best time to enter and exit a trade. Hence, a chartist can use the trio of lines together as discussed above to determine both the direction and strength of the trend. Trend trading strategies often focus on trading in the direction of a strong trend, when there is clear direction of which way an asset's price will continue. Whether the price is increasing or decreasing, if there is a clear trend line on a price chart, it could mean that the risk is relatively lower when trading. In order to determine these price trends, traders look to use trend strength indicators, such as the ADX indicator. This technical analysis tool was developed in 1978 by Wells Wilder as a trend strength indicator for the commodities market, although it can be applied to all financial markets. In particular, it is effective when used in collaboration with momentum trading strategies, within the share market and forex trading. This is because strong trends are generally more prominent within highly liquid, and often volatile, markets, so the trader is able to ride the price trend smoothly until it ends. The ADX indicator is one of the most popular and effective trend indicators, especially when used alongside other similar tools. Strategic use of ADX price is the single most important signal on a chart. Read price first, and then read ADX in the context of what price is doing. When any indicator is used, it should add something that price alone cannot easily tell us. For example, the best trends rise out of periods of price range consolidation. Breakouts from a range occur when there is a disagreement between the buyers and sellers on price, which tips the balance of supply and demand. Whether it is more supply than demand, or more demand than supply, it is the difference that creates price momentum. Breakout